Good morning and welcome to NYFP. Today I'm joined by Dan Waldron, who is Senior VP and ETF Strategist at First Trust. Good morning, Dan. Thanks for joining me.
Good to be here.
Well, you just rang the opening bell today, and that must have been quite an exciting experience. But first and foremost, if you could give me a background of your latest AlphaDEX ETF products.
Today we rang the bell to commemorate the launch of 14 new exchange-traded funds, 5 of which are domestic equity ETFs, but more importantly, more exciting, I should say, is the launch of 9 international AlphaDEX funds. These are a family of ETFs that are designed to generate returns above and beyond the mark by using fundamental metrics to identify the best companies, in particular baskets of stocks. So we're very excited about having the opportunity to ring the bell today.
Well, Dan, could you tell me a little bit more about the methodology? I know that they're quantitatively driven, but could you go into a little bit more detail?
Sure. You know, the traditional index tracks indexes that are built around 2 things: owning every stock in the market, but number 2, weighting them based on their market cap. We're trying to take a much different approach. We're using traditional investment metrics like price to book, price to cash flow, return on assets, price momentum, factors that typical active managers use to identify the best stocks in a particular market. So we think this alpha approach is going to be much better for the individual investor.
Well, Dan, the ETF industry continues to become more competitive, and a lot of people are expecting a contraction in the industry for the second half of this year. But what do you expect to see in the short term?
I don't expect to see any slowdown in terms of the growth of the ETF market. There's over 1,000 exchange-traded funds. It's a $1 trillion marketplace. I don't think it's going to replace the mutual fund market, but I think we're going to rival the size of the mutual fund market here in the next 2 to 3 years. So yeah, the market may pull back somewhat, but we think there'll be more ETFs brought to market, and we think the size of the market is going to continue to grow by leaps and bounds.
Okay, Dan, last but not least, before I let you go for today's interview, I do want to ask you a little bit about risk-on, risk-off trading. Now, there's been a lot of volatility across all markets, all asset classes. And since you're an ETF strategist, what is your advice to traders as well as investors?
Well, I think you have to be very selective. I think it's a stock picker's market and will continue to be a stock picker's market. So I think that coming out of this pullback in the market, we think it's simply a soft patch in the economy. We don't think we're headed to another recession. So we think that investors should be looking at the long-term opportunity. So we think you should still be in the market. We think this is a great opportunity to come in and buy certain segments that maybe have pulled back harder than others, like technology, like healthcare, and set yourself up for a great 2012 in terms of investment returns.
Okay, Dan, well, thank you so much for all your insight today, and congratulations on the opening bell.
Thank you very much.